Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing well. How are you today, Will?
Cannot complain. The weather's been beautiful the last couple days and starting to wind down the semester. I know in the lab I teach, the last round of labs are happening this week for that. So just about to the finish line.
Well, awesome. Congratulations.
Well,
We're starting to wrap up here at Mizzou as well. So
the end is in sight. And with the end in sight for the school year, we're seeing planting pick up more and more. So exciting things all around. But
sure.
a quick rundown on where we sit on the prices. Ben, we haven't really seen too much of a strong shift in the market in these last several weeks here. Looking at the futures prices for May 24 corn, down 4 cents at 431. December, down 4 cents at 469. May soybeans down 23 cents at 1158. November soybeans down 17 cents at 1167. Soybean oil on a cents per pound basis, we're down 2.43 cents at 45.47. And soybean meal by the short ton, up $2.50 at 338.50. The May wheat crop was down 14 cents at 551. July wheat down 13 cents at 567. And then that June crude oil contract down 73 cents at 84.88. So, Ben, we're still seeing kind of a continued slow loss trickle into the market, but still kind of a lot of sideways movement. What's your outlook here?
I have a couple of thoughts about this. I'll start since you ended there on the West Texas Intermediate crude oil. I'll start there. Sometimes we do these week over weeks or these changes on a weekly basis because it's easier to at least think about magnitudes than the day to day, right? We kind of lose the trajectory sometimes in the day to day, but we do weekly here, and one of the things we lose in the weekly is the differences in the prices throughout the week, or the volatility up and down, and we saw that West Texas Intermediate crude oil get all the way up over $90 a barrel. Of course, we're now finishing the week down compared to where we started the week. So that would be my first comment there on the crude oil. The other thing, or a couple other things. One, we continue to move lower in most of these grains, as you mentioned. For corn, I'm maybe worried about the nearby corn contract here as we get towards the end of April, from the standpoint that we had a lot of unsold grain this year as a higher percent than we normally do. We saw the fallout in the February nearby contract when we got close to the March expiration. And I think we could see a very similar thing here at the end of April as we get close to the May expiration of those contracts. So I am a little concerned that we maybe go down and hit $4 here on that nearby May contract for corn over the next 2 weeks.
Well, and looking at some of the moving events, there hasn't been a whole lot of news to trade on here lately, it seems. But the USDA did make some adjustments to their ending stocks and reshuffled a little bit on those corn and soybean pictures there. So for corn ending stocks, they pushed ending stocks down, not quite as much as what some traders had expected, but demand was also increased. But given that, you think that maybe that would add a little bit of a positive influence into the market, but still kind of sideways to lower. What's your look on the ending stock shifts from USDA?
Sure. So we'll stick with corn here for just a second. So we did see corn, the use increased 50 million bushels, 25 million for ethanol, and 25 million for feed use. Again, that feed use number was partially due to the bullish March 1 stocks number that we got a couple weeks ago. You're right on that. Like, while we increased demand and decreased those ending stocks, it wasn't as much as the trade had expected. And I think we will see some more increases in that corn demand picture probably in the May WASD, maybe due to ethanol. We've seen some very strong ethanol crush here, at least in March, and I think that's going to give justification to go a little bit more on the corn used for ethanol. So maybe a little bit more tightening in that ending stocks, or excuse me, in that corn ending stocks picture. But we're still above 2 billion bushels. I think we get closer to 2 billion bushels of 2023, 2024 ending carryout. But certainly not anything that's overly bullish, just kind of maintaining the picture. I'll mention soybeans here for just a second. We actually saw ending stocks increase for the soybean picture. That was because of a decrease in exports. Conversely, opposite of the corn picture, where we could see that stocks number tighten, exports on the soybean side, I think, are very soft. We could see a little bit more deterioration in those soybean export numbers, but the crush side of domestic crush remains strong. And so I think USDA counters all that lost export with an increase in crush. I think they have to. We've just seen such strong crush numbers.
Well, and you're kind of teasing the NOPA report that we're going to talk about here in a little bit, but it is kind of interesting the way that USDA is shifting around these soybean numbers, because, just looking at the ending stocks report and maybe some trade estimates, it looks a little bit bleak. It looks like it could push down the market even further. But then again, you talk about those crush numbers being kind of the saving grace that's maybe adding support back to the soybean complex. I guess within that, the National Oilseed Processors Association did update their numbers with some record high crush values for March. So that is kind of setting that pace back into the soybean market. So Ben, what's your outlook there moving forward?
This is a great discussion. It was my third point I was going to mention when we were talking about the markets earlier, and I was just like, "Now I'll wait till we get to it." But right there in that soybean complex, we saw a lot of deterioration over the last week in that soybean oil price, and that's all related to the NOPA report that we got on Monday of this week. The number was an all-time record at 196.4 million bushels, but that was a million short of where the expectations were. So another way to say that is the expectations were extremely lofty, certainly reachable, but lofty. And so even though we had a record, it still fell short of expectations. But the reason the soybean oil market reacted so strongly is the soybean stocks came in even higher and towards the top end of the entire all the trade estimates. And this is the fifth consecutive month that we've seen soybean oil outperform expectations. Now, that in itself isn't necessarily, it is noteworthy, but it's come at times where the market has missed the soybean crush number, right? I just said that they missed, or they were expecting a million more bushels of soybeans crushed. So they were lower than their expectations, and yet soybean oil stocks came in above expectations.
Yeah.
That signals that implied use wasn't as strong as what people thought. And we keep building that soybean oil stocks number. So that's my takeaway there, right? Like, this is going to put pressure on soybean oil prices, and it's going to put pressure on the soybean complex as a whole. Even though we're seeing soybean crush very strong, it's going to put pressure on the complex.
Well, and Ben, it's kind of an interesting point that we're at right now, because we're seeing a lot of kind of reshuffling just within the USDA stock estimates, but also, production that could be coming online. So we look at CONAB's estimates, Brazil's kind of equivalent of the USDA, and their reduction on expectations for both the country's corn and soybean crops. So maybe a slight resetting of what the picture could look like and what, those end stocks could look like moving forward. So with CONAB reducing those stocks, do you think that's going to add much of a positive influence into the corn and soybean market? But it kind of looks like it's largely already been priced in. So a little, small factor there maybe.
Yeah, so let's focus on soybean here, because that's kind of the big number I think that people are drawing attention to is, so this month, the same day that USDA released their estimates for supply and demand around the world, CONAB also reached their version, and they lowered their soybean number about 500,000 metric tons. So they lowered it to 146.5 million metric tons. That compares to the 155 million metric tons that USDA is estimating. And so there's a lot of discussion about why these two numbers differ and why do they differ to this magnitude. And they don't necessarily have to come together. There's not one that's right and one that's wrong. Part of this is in the way that they're calculated. So the U.S. soybean marketing year, most U.S. producers, I think, are kind of familiar with the marketing year, runs from September to August. In South America, their marketing year runs from January to December. And so some of that discrepancy is partially explaining this difference in the soybean production. Keep in mind, there has been shortfalls in Brazilian soybean production in the past. So some of that gets weighed in compared to USDA. But to your point, we do see South America and private companies lowering their soybean estimates out of Brazil, and USDA has not to date, right? They left their Brazilian soybean number at 155 million metric tons. That disappointed the market and was seen as bearish after the USDA reports. I do think they eventually will lower a little bit, but I would also turn around and say I think USDA is suffering from a little bit of recency bias from the standpoint that they cut the US corn and soybean crops, or at least the corn crop last year. And then we got around to January, we were seeing all this supply coming onto the market. We were seeing prices where they were, and we were like, wow, we had a record corn crop, even though, you know, we had cut it early in the season. So I think USDA is a little bit skittish due to that recency bias.
Well, and if you think from USDA's standpoint, you know, you don't need to make those revisions right now, and you kind of have a little bit of time to see how that plays out. So why make them before you really need to anyway?
Sure. Yeah. So it'll be interesting. There's a lot of attention being drawn to this split between USDA and CONAB. Again, I'll just say the numbers do not have to match, and one is not right and one is not wrong, right? Like that's a great way to, I think, look at that.
All right, Ben. So moving forward through the rest of this week, what should farmers and ranchers be paying attention to on the crop marketing side?
Well, so it's actually kind of a rather quiet week for us. Last week was extremely busy with the NOPA report and USDA reports. We also had the CPI and PPI. The CPI index came in very hot again this month. Kind of, I think, sent a lot of shocks to the macro economy because it probably signaled that traders weren't going to cut interest rates in June. And instead of 3 interest rate cuts, maybe only 1 or 2, right? So that was how big that CPI report was last week. We don't have anything like that this week. We have an ethanol report on Wednesday. We have an export sales report on Thursday. Next week, we have export inspections on Monday with crop planning and conditions. And that's really our week. Nothing as flashy as what we had this week. So maybe we should take some of the information from this week's program that we didn't get to and apply to next week. Yeah.
All right. Well, Ben, it's always great to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.